there's going to continue to be some pressure on markets because more sanctions may follow. And we saw yesterday the news that Russia is also putting counter sanctions on the West. So it will affect broader markets. But if you look within, if you think about the energy complex, is obviously doing extremely well. I expect to see more gains there, as well as, maybe just more safe haven into US assets because people are not want to be exposed to Russia. So I think those dynamics will be really dominant. I don't think we can completely say there's a full reset here because the uncertainty, like they have to get to ultimately a negotiation of a ceasefire, and that seems to be quite uncertain at this moment. So it's a safe haven play at this moment. I think of US assets, think of Bitcoin, think of energy. I think that's what really will drive the markets for gains here.
Yeah, and we are seeing, of course, the collapse of the Russian ruble, credit default swaps on Russian sovereign debt. They've come down off their highs of a few days ago, but they're up more than 300%. Of course, there are sanctions on owning debt, trading debt, selling U.S.-denominated debt. Some have been in place for 8 years, but there's a lot of these financial sanctions being placed. Do you think that is going to impact the U.S. markets or Western European markets? Jamie Dimon saying yesterday, I believe it was, that these sanctions, while noble in their, and I'm paraphrasing him, while noble in their goal, may have unintended consequences that we're simply not aware of yet.
Well, there's definitely a point to that because we don't really know how the sanctions are restricting companies from doing business with one another, and particularly companies that have business in Russia itself. So that is, I think, still to be worked out. We see Russia putting up capital controls to not have their citizens sell foreign currency, for example, to try to get out of the ruble. But we haven't seen any restrictions yet on, say, US companies not able to sell in Russia, as an example, or European banks not making any payments to Russian companies. It's just more about a messaging system, which Dimon alluded to. I can not message them through SWIFT, but I can still transact with them in Russia. So that's, I think, still to be worked out. Now, on the other hand, sanctions itself are like what I think of the trade war with the tariffs, right? They do have economic effects. And so trade with Russia obviously will slow down dramatically. That's, I think, one thing we have to really keep in mind.
I know markets had a tough February, Ben. We got to go so very quickly, but are we underestimating the ultimate risks here? I mean, this could still escalate in a way that we have no comprehension of.
Absolutely, Brian. We cannot exclude the widening of the conflict. I think that's why markets stay on edge.